Good afternoon. This is Tony Cherniawski, manager of the Practical Investor LLC. Today is February the 11th, 2009. This video is meant for instruction and entertainment purposes only. This is not a solicitation to buy or sell any security. The purchase or sale of a security may result in a loss. Please consult with an experienced advisor who may explain the risks of any investment you may be considering. You cannot invest directly in an index. The topic today is triangles or pennants. That is the question. Hello again, and it's good to be back. I've stayed away from the video primarily because of a lack of good analytical information that I could pass on to you. I think tonight will be a very good start to something that hopefully we can continue on for a while now. One of the reasons why I wanted to say that is because we've had a huge sideways market for about 2 months. And earlier in January, I came out and said, look, if the market goes below 850 on the Standard & Poor's, the market could have a bit of trouble because that would be very bearish. I left it pretty much at that for the time being. And the fact of the matter is we've still been staying pretty sideways, even though we went down to 804 at one point not too long ago. What I'd like to do is discuss what's happening in the indexes and the emergence of a pattern. Some people have been following it. I think some people have mislabeled it. And what I would like to do is bring my analysis to bear and see what you think of the matter. So without further ado, let's begin with the NASDAQ 100. What you see here is the potential of 5 waves. It's still a potential, and I want to be clear that this is the cleanest Elliott wave picture you will see of all the indexes right now. So the fact is that we've got a potential for 5 waves in the NASDAQ 100, and I would like to just point out there are some differences of opinion which we'll discuss as we move along in this program. Now, if this is the case, we have just completed the 4th wave, the tip of the triangle called a throwover above the final end of the triangle pattern. And we're now back within the triangle, ready to move down potentially into the 5th wave. A normal pattern, or normal target rather, for a 4th wave triangle may be around 923 on the NASDAQ 100. The way you achieve that target is that you simply take the widest portion of the triangle, which is 364 points wide, and you simply subtract that from the top of the 4th wave, which is 1286, and you get the result. Now, the point that I want to make here is that this is potential. And there are 2 points of view that we need to bring in here that can seriously affect whether this is a real 5th wave or not. First of all, the 5th wave may expand well beyond the normal targets. This is called an expanded 5th wave, if you will. The pattern here could allow for that type of an extended 5th wave pattern that could go beyond 923. So that's item number 1. Item number 2 is that the June to October decline may also be construed as a zigzag. In other words, instead of 1, 2, 3, we could have an ABC pattern with a triangle B wave instead. Now, why am I saying that? Well, if we have an ABC down to late October in the NASDAQ and a triangle B wave, this triangle could be construed as a pennant rather than a 4th wave triangle. Now, a pennant has a completely different connotation. The first thing is that the pennant suggests that the target at the bottom right-hand side of the page, not yet developed yet, could be equal to the size of the entire decline from the June 5th or 6th high to the November 23rd low, October 23rd low rather. So if that's the case, we have a potential for 908 points of decline here. Now, I'm not saying that that's going to happen. In fact, I am just as much in question about this as anybody. But what I am saying is we have some serious discussion here to look at the NASDAQ and make sure that we've got the right analysis going on. The second thing is we should look at the Standard & Poor's Index. And in this case, I want to be very clear that I do not count 5 waves in any of these moves. As a result, these are ABC waves within ABCs. And you can see that very, very clearly. So when you see the ABC here, that means that we've had an A wave down to the low on October the 9th. And then again, we've had a huge run. This is called a running triangle, B wave. And then following that, we'll either have an ABC or a 5-wave move to the final low sometime here in the near future. So if that's the case, we've got a bear of a different color here. So a normal target, if this were considered a 4th wave triangle, might be around 600 on the Standard & Poor's Index. However, if this is a pennant, this could be a grizzly of a bear market here, because what we have is where the wave C, which is not yet formed, could be the length of wave A, which is about 600 points. So we have quite a stir here on what could potentially take place in the near term. This triangle could also be a pennant, and in which case we have a very serious matter on our hands, something to be very, very concerned about. So what I want to do here is just finish up by saying I don't have any answers other than just a few statistics about triangles. So let's go through those for a minute. First of all, triangles are highly reliable patterns. They only have about a 2% failure rate, so 98% success rate. In other words, triangle is known as a continuation, consolidation, which means that the market continues in the same direction after the end of the triangle as what happened before. So that being said, let's talk about what are the potentials for reaching these targets. Well, let's just say this. The normal decline out of a triangle can be as much as 20 or 30%, just given actual percentages. However, if we use the 4th wave triangle analysis, let's go back to that for a minute on the S&P. What we have here is a potential of about 266 point decline. That would be about right. That would be a little bit short of a 30% decline here. The fact is, triangles have a 57% probability of meeting or exceeding their target. So I just want to bring that other statistic to bear on the triangles and the pennants, because I just want to make sure we understand that this is a very reliable pattern, and it could be a very large one. It could be larger than most people think. Well, finally, if you'd like to follow the progress on this triangle pattern, I have a daily newsletter that might be something worthwhile for you to look at. We have a special right now on the newsletter. It's $50 until April the 15th. That's 2 months of newsletter. Normally it's $100 a quarter. So we're giving a bit of a discount for those that are interested. If you would like that, you can email me at tonyc@thepracticalinvestor.com. Those of you who would like to know more about my management style and how I do things, you can also reach me through my website. Please send in your email address and phone number, and I'll be in touch with you as soon as I possibly can. Normally, I don't reach people during market hours because I am an active trader. So having said all that, I hope this has been very informative, and I wish you the best of luck trading the market. Thank you, and do the right thing.